everyone, in this video we are going to go over a strategy that we are going to use anytime from 9:30 Eastern Standard Time, New York Open. So basically we are going to wait for the first 30 minutes to finish at the New York Open. Then we are going to draw a line from the highs and we are going to draw a line from the lows, and we are going to wait for price to either sweep the high or sweep the low. As soon as this happens, as soon as price break to the upside, we are going to wait for the last fair value gap to form, and price needs to break through it to make it an inverse fair value gap, and we're going to enter straight from where it closed, and we're going to target a straight 1 till 2 risk reward trade. Same when price sweeps the downside, we are going to wait for the last fair value gap to form. We're going to wait for price to break through the fair value gap to inverse the fair value gap and make it an inverse fair value gap. And then as soon as we have a candle closure, we are going to enter straight, and we are going to wait, and we are going to target a 1 till 2 risk reward trade. So just make sure this candle is going to be the first 30 minutes candle of the New York Open, first 30-minute candle right over here, and then we are going to wait for the highs, and we are going to wait for the lows to get swept, and we are going to enter from an inverse fair value gap. So let's go to the charts and let me show you some examples. Alright, so when we look at this piece of price action, I'm on the 5-minute. So this green and red line, this is the orb algo by Flux chart. We are using this indicator to get the first 30-minute candle, and you can see custom session enabled 9:30 till 11, but the important part is the 9:30 open. So it will take the first 30-minute candle and it will draw out the highs and the lows of that first 30-minute candle. So what we want, so we have swept the highs right over here. As you can see, there was a big push up. Now in this leg, we want to see where has the last fair value gap that has been formed. As you can see, it was this one right over here. This was the very last one. Then price came back, and can you see these candles came through but did not close below it, and then this one, this candle right over here, closed below this fair value gap. It broke it, and this became a inverse fair value gap. And then we are going to enter our trade right over there on the closure. We are going to put our stops at the most recent high right over here, and then we are going to target a fixed 1 till 2 risk reward trade. And as you can see how this trade played out, it was a few hours, and this one played out perfectly right over there. So let's go to the next example. Let's have a look. Alright, so here you can see the first 30 minutes has been formed. The high is the green, low is the red. Price broke through it right over here. We do not have a fair value gap. Price came back, broke out again. We have a fair value gap right over here when this price broke out right there. So when we drag this one out, price broke through it, closed below it, and then this becomes a inverse fair value gap. You are going to enter right over there, put your stops above the most recent high, and you are going to target a fixed 1 till 2 risk reward trade. And as you can see, this one played out perfectly, went a little bit into the red, and then we had that big push down. So let's look at one more example. So here's another example. As you can see, the first 30 minutes was a huge first 30 minutes with a big push at the open right over here. Price broke through. Now we are waiting for that fair value gaps to form. There's one right over here, a fair value gap. When we drag that one out, you can clearly see this candle right over here broke through this fair value gap and made it an inverse fair value gap, stops above the high, and we are going to target a 1 till 2. And clearly you can see we got stopped out right over there. We were in the profit, price reversed, and we got stopped out. Now when we look at this price action right over here, there was a fair value gap formed, there was a fair value gap formed. So the last fair value gap that has been formed was this one right over here. Price broke through it, and this becomes a inverse fair value gap. You can enter right over there, stops above the highs, and then you can target your 1 till 2 risk reward trade right over there. And let's see if this one played out. Consolidated a little bit, and then eventually it played out right over there. So we have one losing trade right over here and one winning trade right over here, all the way till there. Let's look at one last example. Alright, so here is another example. As you can see, price broke through the low right over here. The most obvious last fair value gap that has been formed was this one right over here. When we drag it out, you can clearly see we have a big push up and close below. You put your stops at the lows right over here, the most recent lows, and then you're going to target a fixed 1 till 2 risk to reward trade. And as you can see, price went a lot. It went all the way up to 1.3 risk to reward. So I think in this case it's all up to you if you are going to take profits, are you going to take partials. And then price reversed right over here and we got stopped out eventually. And then yeah, this one you can see turned around. And then you can also reverse trade this if you see on the higher time frame like structure, all right, this price wants to reverse. If you haven't seen it, cool, this was either a break even or a losing trade. If you want to trade both directions, now in this leg we can look for the last fair value gap that has been formed, and it's this one right over here. There we have our closure candle. You can take your trade right over there. You can put your stops below the most recent high or there. So there's one stopped out, one there. If you put it there, got stopped out. Then we have another fair value gap right over here. We have a closure candle right over there. Stops above the most recent high. And then you can target your fixed 1 till 2 risk to reward trade, and that one played out. So this one was an optional one. It was all up to you as the trader, break even, partials, or losing trade. Here you had a clearly losing trade, and here you had a winning trade. Nice and easy strategy. We wait for the first 30 minutes. We wait for the last fair value gap to be formed, to be inversed. Then you enter on the closure of a candle and you target a fixed 1 till 2 risk to reward trade. If you want to get this indicator, it's free. You just go to indicators, you type in orb, flux, charts. You add this one to your chart, and this is going to be the settings. Your custom session is 9:30 and a 30-minute orb, and then you are going to have these lines on your charts. Hope you enjoyed this video. Please leave a like and subscribe, and then I'll see you in the next one. Cheers.